Hey guys, what's going on? Jeb here, and in today's video, we have something very important to talk about in the realm of cryptocurrency technical analysis, and we're basing this off of quite a lot of comments that I got in yesterday's video, and in pretty much the comment section of every single video on this channel. Because guys, there's a major misunderstanding that some people have having to do with technical analysis, how it's done, and how we actually make predictions. So in this video, I'm going to be clearing up something because this misunderstanding is not only hurting my reputation in the eyes of other people, those people are going to make massive mistakes in their analysis because of this misunderstanding of how analysis is done. So guys, in today's video, we're going to be talking about all of that and more, and I think you guys are going to get a lot of great value out of today's video. As always, if you do, consider hitting that like and subscribe button down below. It has come to my attention in recent days that about 40% of you are not subscribed to this channel. So if you haven't already subscribed to the channel, I'm looking at you, Billy Bob Johnson. Hit that subscribe button. I am aware that you have not subscribed, and I'm coming for you if you don't subscribe. I'm joking. I'm joking. Please don't, call the police on me for threatening you. It was a joke. It was a joke. Just subscribe, and we're cool. We cool? Dope. Let's do it. Guys, before I get started, I do want to mention one thing, and that is that the sale on CT2A is over, but it's kind of still going on because the price of the Academy is going to be going up another $50 in about 5 days on September the 1st from $299 to $349. And if you guys want to get into the Academy before that happens, I would highly encourage you to go ahead and do so because, guys, there is a ton of content coming to our ecosystem very soon. We have hundreds of video ideas that we're going to be putting into our Academy, and you guys are going to be getting access to all of that. So if you're interested in that, check us out at the link in the description down below. But anyway, guys, without much further ado, let's go ahead and dive right on into it. You know, I got some mixed opinions in yesterday's comment section about whether or not yesterday's dive right on into it was like a 9, and some people were saying it was like a 6. I even got one person saying it was a 1, and I was just like, I thought it was at least a 2, but okay. But anyway, another one of the comments that we also got a few times in yesterday's comment section was a comment saying, Jeb, why in the world are you predicting that Bitcoin is bullish and might be going to new highs this year when you just said that Bitcoin's going to pull back to $10,500? Because a lot of people got confused about that and, in fact, assumed that I had no idea what I was talking about and I was contradicting myself when, in fact, I was not. And this video is not a response to haters or anything. It's actually a response to what they're saying genuinely, because while they were sometimes rude in how they made that assumption that I was not understanding what I was talking about, they do have a genuine misunderstanding of how technical analysis is done, and I want to explain it to you guys, because if you don't get this, you're just not going to get technical analysis, and it's really important that you don't make this mistake, because these people that are making this mistake, I guarantee you, are inexperienced in trading and technical analysis, either that, or they just simply didn't listen to the video, because it's not what I said. Like I said, this isn't a response to the haters or anything. This is a response to the misunderstanding about technical analysis, that there cannot be a bullish factor going on in the long term and a bearish factor going on in the short term. So let's go over what I said in previous videos. So in previous videos, we have made some predictions and calls that on the surface may seem contradictory. So let's go ahead and cover that. In this video right here, we talk about how I don't believe that Bitcoin is going to be returning to all-time high as soon as people think it is. In this video, we talk about the stock-to-flow ratio and how it predicts that Bitcoin will hit $100,000 1 year from today. In both of these videos, I say that Bitcoin is unlikely to hit $20,000 in less than 6 months. So the alignment of my opinion is exactly the same in both of these videos. The confusion comes in this video right here and this video right here. Because in this video, we do some technical analysis, and I make a call that Bitcoin's going to pull back to $10,500, which I still believe is going to happen, and we'll talk about in a minute. And then in this video, we talk about bullish news on Bitcoin and why it has long-term bullish implications for the market. So on the surface, you can see why people are confused. Jeb, are you bullish or are you bearish? Which is it? You're talking about bullish future news, and you're also talking about Bitcoin pulling back to $10,500. It's a good question, one that I wish people would just simply ask and let me explain because they didn't understand, rather than assume I have no idea what I'm talking about, because believe me, I do. What we were talking about in those videos are two separate things. You can talk about long-term technical analysis and fundamental analysis and general market analysis in one light, and shorter-term technical analysis and fundamental analysis and market analysis in a different light. So my opinion is and has been for the last 4 videos, and has not changed, and even longer than that, that I am not completely convinced that Bitcoin's returning to all-time high this year. I do, however, believe that it's possible for Bitcoin to return back above $13,700 before the end of the year, which, when When I said the word new highs, I should have been more specific. I was talking about 13.7 than 20,000. That was my mistake for not making that more clear because I wasn't talking about 20K this year. And my opinion is also that Bitcoin will pull back to $10,500, somewhere in that range in the next week or so. That is what we talked about 2 days ago. So essentially what we're talking about is long-term bullishness on Bitcoin, that Bitcoin's going to $13,000, $14,000, $15,000, maybe $20,000 in the next 6 to 12 months, and short-term bearishness. You can be bearish on the short term. You can be bearish on the daily chart and be bullish on the weekly chart. It is very possible to be bearish on the short term and bullish on the long term. I thought this was self-evident, but enough people made this comment that apparently it's not, which means it's something that needs to be addressed, because if I'm genuinely serious, I'm not saying this for clickbait. If you don't get this, you are going to screw up in cryptocurrency technical analysis, because it's never as cut and dry as just saying Bitcoin is all time frames bullish or Bitcoin is all time frames bearish. It's not that simple. Doing some back analysis on the market, we can clearly see that during this trend right here, Bitcoin was bullish. As we can see, Bitcoin eventually broke out. But does that mean that Bitcoin was bullish in this little time frame right here that only lasted about 5 days? No. Bitcoin was in a long-term uptrend, but in the short term right here, it was bearish. You can have bearishness nestled in a bullish longer-term trend, and you can have bullishness nestled in a longer-term bearish trend. Back in 2018, let's say I was sitting right here and I was doing analysis on the 13th of April 2018. I could be bullish for the month of April, but bearish for the year of 2018, and that would have been correct because we were in a month-long uptrend and a long-term downtrend. In the same way, there is nothing inconsistent about me being bearish for the next 2 weeks, but bullish for the next 6 months, because Bitcoin might pull back for the next 2 weeks, but that doesn't mean that it can't go into a general uptrend. Guys, the stock market, for example, follows a pattern something like this, where yes, there's going to be pullbacks, but in general, it is always marching to new highs. You can see that on the S&P 500. You can be bearish during these movements, and you can be bullish during these movements, and then you can also be bullish on the long-term movement, or if the market was doing something like this, you could be bearish on the long-term movement. Point I'm trying to make here, again, I swear, I'm not making this video because I'm salty at the commenters. I'm not. I really don't care all that much. I get all kinds of hate comments. It doesn't bother me. The reason I'm making this video is for the people that don't understand this, because it is genuinely important. It is very possible to be both bullish and bearish at the same time, so long as that bullishness and bearishness is on different time frames. And even so, it is a mark of a wise trader to be able to weigh the bullish options and the bearish options at the exact same time without emotion and see which one comes to the top of reason and see which one is most accurate. In fact, I would not say that it's an unwise thing to do. In fact, I would not say it is an inexperienced trader who looks at a market through a bullish and a bearish lens. I would say that is an experienced trader, because you need to understand both sides of the argument before you can make your decision on how you're going to approach that market through trading and investing, etc. So the question is, Jeb, why do you say Bitcoin is going back to $10,500, but then in the next video say Bitcoin's going to maybe $14,000, $15,000 by the end of the year? Is that not philosophically inconsistent? No, it is not philosophically inconsistent, because what happens in the next 2 weeks does not necessarily mean that that trend is going to continue for the next 4 months or 5 months, however long is left in this year. And I want to make sure that you guys don't fall into the same trap that some of the people commenting on yesterday's video do. Because if you think that technical analysis is as black and white as saying, I am all bullish or all bearish, you are going to get very, very, very badly wrecked by the market. It is a mistake, not one you want to partake in. I will do my best moving forward. I think I already do, but I will do my best moving forward to make sure I am crystal clear about what I'm talking about, whether or not I'm talking about short-term movements or long-term movements. So in the light of what I just said, I am bearish in the next week or so, and I'm about to talk about why. We're about to do some TA. I do think that Bitcoin's going to pull back maybe to around $10,500. I might be wrong on that. You never know. But even with that prediction, I still think that Bitcoin is going much farther to the upside before the end of this year. So with that said, let's do some actual technical analysis, because so far I've just kind of been lecturing you. It is an important lesson, but let's do some actual analysis on the market. Here's the reason that I believe Bitcoin is pulling back to $10,500. We have 1, 2, 3 lower lows. We also have 1, 2, 3, 4 lower highs at the moment. That is a clear downtrend, and Bitcoin is most certainly in a descending trading channel inside of a longer term ascending trading channel. You see how on the longer term Bitcoin's bullish, but on the shorter term it's bearish? On the longer term, we have higher lows and higher highs. That's a bullish longer term trend that I think is actually going to be broken. But on the shorter term, we're bearish inside of it. Exactly what we were talking about a second ago, where you can have a bearish trend nestled in a bullish longer term trend. They're like little nesting dolls. You can have a dozen of them deep if you want, because there's also a bullish uptrend inside this bearish downtrend, inside this bullish uptrend, inside of a longer term bearish downtrend. But of course, the reason I think Bitcoin's pulling back to 10.5 is not limited just to the market that we're looking at here and just the descending trading channel. It also has to do with things like our bearish MACD right now. We're already below the 0 level and we're bearish. Our RSI is already pretty good on the 4-hourly chart, but if we look out to the daily chart, there's definitely more room that it could pull back. We're very bearish on the MACD on daily, and we're also pulling back on the RSI. Now, one thing to point out on the RSI is that we're having not a descending trading channel, but actually a descending wedge, depending on how you want to draw it. If you draw it like this, a lot of times these are actually going to break in this direction rather than in this direction. So keep an eye out for this. This might be a counter indicator of what I'm saying, and if we do break to the upside, we may find that this was our early warning sign, but I don't think it's strong enough just yet. Stoch RSI is on the floor, which is generally a bearish indicator. And as you can see, we have not only pulled below the 20 daily EMA, we've also rallied up to it and rejected from it. Also, as you guys have probably seen by now, over 62,000 Bitcoin options are set to expire on the 28th, which is generally agreed upon to be a bearish thing that'll bring more volatility into the market. But notice how I said that. Is generally seen to be a bearish thing that can bring more volatility, but volatility is actually a bullish thing. So that's a bullish and a bearish argument, depending on how you look at the volatility and depending on what kind of volatility it is. Generally, more volatility is going to mean more underlying bullishness, so this might be a bearish thing in the short term, but bullish thing in the long term, exactly what we've been talking about how in the next week or so we might be bearish, and in the longer term we might be bullish. It's important to understand that technical indicators have a time frame attached to them. Sometimes a technical indicator is going to be important for 12 hours. Sometimes a technical indicator is going to be important not from 12 hours from now, and it's not going to be important for another month, but then when another month comes by, that technical indicator all of a sudden gets very important, and then for the next 3 months after that, it's really important and bullish. You can have two technical indicators, one's bearish and one's bullish, and they don't counteract each other because the one bullish one is short-term and the one bearish one is longer-term. That happens all the time, and it's part of the wisdom of trading that you need to understand. Another reason I can see Bitcoin pulling back to $10,500 is because of our falling volume here. As you guys can see, the volatility on Bitcoin hasn't actually dropped that much. We're still in a very similarly sized trading channel, but the volume has dropped. Over on Google search trends, we can also see that the interest in the key search term Bitcoin has dropped week over week for the last 5 weeks, down to 49 where it currently sits. So what do all these technical indicators have in common? They're all short-term bearish technical indicators. They're all going to be important for the next 2 weeks, and from there on, we can't really tell because they're short-term technical indicators. Whether or not Bitcoin is above or below the 20 EMA is a short-term indicator, because that can change like that with just a $1,000 price movement. The Google search trend volume, the Google trend search volume for Bitcoin is a short-term technical indicator, because that can change like that. But longer-term forces like institutions stepping in and building infrastructure in the space, that's longer term, because when you build infrastructure, typically that's not just going to disappear or explode overnight. It's going to take time. So understand, time frame analysis is very important to your technical analysis, and it's very important that you understand that bearishness and bullishness can live in harmony if they are sitting in different time frames. So my position is and has been for the last week and more that I don't think Bitcoin is going back to $20,000 this year. I do, however, think Bitcoin will more than likely breach $13,700 before the year is over, and I think for the next 2 weeks or so that Bitcoin is going to be bearish and will probably pull back to around $10,500. We will see how those predictions come to pass and whether or not they do, and I would love to hear your opinions on them in the comment section down below. I hope I have made myself crystal clear in this video, because I'll be honest, I don't really get salty at comments, but if there was one that I do get salty at, it's when people say that I'm philosophically inconsistent when I fight very hard to make sure that I'm not. I am not contradicting myself when I'm talking bearishness in the short term and bullishness in the long term, and I hope you guys understand that, not because I care that much about what they think, but because I want you guys to make sure that you're not making a mistake in your trading, because if you don't understand this, I've said it 100 times this video, it's going to hurt you. Anyway, guys, with that said, that is going to wrap it out for today's video. But before we go, I do want to remind you that almost 40% of the people watching these videos are not subscribed. And subscribing is free. You can hit the little red button down below. We're trying to get to 75K subs by the end of the year and 100K by Valentine's Day, guys. We have some ambitious goals here, and we want to hit them, and we need your help, Billy Bob Johnson. I talked about you earlier on in the video. If you don't subscribe, I'm going to steal your dog. That's what I'm going to do. I'm going to steal your dog. Make sure you subscribe, or I'll just have to have like 20 dogs, because there's probably a lot of Billy Bob Johnsons watching this video. I used to have a neighbor named Bobby Johnson, and he was a Vietnam vet. Anyway, guys, that is going to wrap it out for today's video, but I do just briefly want to mention CT2A, because it is what's making all of this crazy expansion that we're doing possible. We're about to be bringing you guys tons of new content. And I'm serious, we have a lot of plans for the next year or so. That's why we're building out a team. We have an amazing product coming to you guys that we're going to be working on starting very, very soon. It's going to encompass hundreds of videos. And if you guys want to be part of that, I encourage you to join us now before the price increases on September the 1st. it's really a very good idea to invest in your education, because if you don't understand how markets work, you're not going to be able to profit in them. It's so important that you invest in your education. If you ever hope to be profitable in these markets, you must always be learning. I've always said, and I will always say, that there is no greater investment than an investment in yourself. There's a reason that athletes that perform at the highest level invest hundreds of thousands of dollars and even millions of dollars in their bodies through health and fitness and trainers and coaching and learning. There's a reason that they know everything about the history of the NBA or the NFL. There's a reason that people that perform at the highest level are always reading books, and they have bookshelves with hundreds of books on them, thousands of books on them. There's a reason the successful people are in book clubs and run those things. It's because investing in your education is incredibly important, and those that perform at the highest level understand that intimately. And if you want to be successful in these markets, you need to understand the same thing, and that is why we created CT2A, so that you have a place that you can go, learn technical analysis, and start applying it today so that you can profit in the markets. Guys, there's a lot of students in CT2A. We're talking thousands. So if you want to join them and get started learning what you need to know to invest in these markets, now's a good time to do it, because the price of CT2A is increasing on September the 1st. Anyway, guys, before I go, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.